Hello friends, this is Martin from Secret, the channel for learning about trading and investing. Welcome to another weekly stock market analysis show where we look at what happened in the markets last week and how we can look forward for a better trade plan for the next week. Right? And remember, this is analysis for January 10th, Monday, tomorrow, 2022. So friends, if you are not subscribed, please consider subscribing and hitting the like button and then sharing to your friends as well so that it benefits all of us. Thank you so much. And here we are with the price actions and patterns. Look at the weekly candle, wide range bullish candle that you see on the Nifty. Here even bigger wide range bullish candle with a gap up actually on both, right? That's what you see on the weekly candles. And on the daily candles, if you see, it's indecisive Friday, which seems to be a change in polarity where the previous previous resistance were breakout acts as a support and then a bounce happened. Same thing happened on the BANKNIFTY also. On the right side you can see that it had taken a dip after a ferocious rally and then again bounced up to end up in a indecisive close with a small body. That's the price action on the daily basis. Right, during the last 5 days, look at what happened. 3 plus 2 plus 4. Look at the breakout that happened, and then it retraced half or quarter of that, and then took support at major support zone, which is the previous resistance, and then it bounced back. Same thing happened. What a breakout from there in the retracement, and then bounce up there. That's exactly what you see. Now the latest candle on the Nifty is indecisive, but it's a change in polarity. BANKNIFTY also small body indecisive, but a change in polarity bounce is seen on the daily time frame. On the weekly, it is 6.5% more upwards on the BANKNIFTY. It's wide range really. 3% up on the Nifty with a third week of recovery confirmation on the Nifty and a second week of recovery confirmation on the BANKNIFTY. That's what you see here, right? The third week of recovery from the bottom and the second week of recovery. Now, what does the Bollinger Bands say? Bollinger Bands are expanding on both the sides, but overall, if you see the band, it is continues to be in a consolidation. Although the volatility is expanding and the price is moving on the bands of the upper side, but expansion is seen on both sides, far away from the median. Overall, it is still sideways. Here also overall sideways. It's not time to say that it is turned bullish, but the expansion on the upper sides and the price action along there also has just begun on the BANKNIFTY also on its right side, as you see. So that's what the Bollinger Bands talk to us. And look at the support and the resistance levels. As of now, make a note of these levels, and this is very useful. Right now it is at the support zone of 17,800 to 17,850. That's on, and above that you have resistance of 17,950 to 18,000, that range, and above that 18,100, and then 18,200 and 18,350, 18,400 is going to be the resistances on the upside. Downside, this first support would be the 17,500, 7,600, which is Fibonacci 23 levels, and once that is broken, it comes to the 17,350 to 17,400 levels, and after that you have 17,200 to 17,300, and then comes back to the 17,000 and 17,050 kind of levels if the supports are breaking and the market is falling down, right? Similarly, on the BANKNIFTY, it is currently at a resistance zone of 37,700 and 37,800, and if the first resistance above that would be 38,000 and 38,100, and above that is 38,350 to 38,400 levels, and then above that you have the resistance seen at 38,900, 39,100 levels. Similarly, on the downside, the support first would come at 37,300 to 37,400, and after that 36,900, 37,100 kind of range, and then after that you have 36,300 to 36,700, which is Fibonacci 38 retracement level, and then if that is broken, then you have 37,600 to 35,900 levels from where the breakout really happens, and if that is broken, then you have 35,000 kind of levels, Fibonacci 50 levels. Remember that the previous swings below that would be 34 750, 34, 350 to 734, 750 that levels, and then 34,000 kind of levels. So right, in case there is a big fallback that happens, that other levels to watch out for. Similarly, upsides also the bank nifty levels to watch out for. Now moving to the momentum and the trend analysis, momentum has turned to bullish now on the Nifty and the Bank Nifty on. Right, that's the big thing that happened the last week and the previous week. Right, the bullish on daily as well as weekly on the Nifty. So medium term and short term, it's bullish now. And so remember that weekly Nifty, it is almost there. You can say it's 59.9 something. Right, so you cannot confirm that it is settled in the bullish zones unless it moves above the 60, but it's almost there. Bank Nifty's cases, it is bullish on the short term, but weekly it continues to be sideways, right? And you can see that what I am talking about. So this is a short term daily momentum, right? It has gone short term in the bullish zones and then retraced and took the support of this, and this is another range shift, a shift of a range from the sideways to the bullish zones and a bounce up. This is very bullish actually. Here also the breakout happened to the bullish zones on the short term and then retraced, but it did not took this went as far as the bottom to form the range shift, but it bounced up. Medium term also, bank charts are not here, but Nifty is, as I said earlier, it's bullish, but almost bullish there, not confirmed yet. Bank Nifty continue to be the sideways. So Bank Nifty has some more catch up to do before we can say that the momentum on the medium term is also bullish. But otherwise, so that's yeah. And the 4-bar divergence is there. This is a 4-bar divergence. So that's chart also is not seen here, but on the monthly you can see that there is you may know the charts are not here for the monthly, but monthly there is a divergence that's on the upside. That's bullish divergence, reverse divergence actually. But last 2 weeks we were talking about this 15-bar wide diluted kind of divergence on the short term daily candles on Nifty and the Bank Nifty, and that seems to have worked out well, and then it has met the target at 17,500 last week and then shot up much beyond that. Same with Nifty also, it has met the targets at 37,000 kind of levels and then shot much beyond that, right? So the monthly divergence that we are talking about is bullish, but it may take time because it's monthly. It takes a month to move, but it is already work in progress. So that is the divergences of the momentum. And trend wise, if you look at the ADX indicator, is saying that the trend has crossed over to the bullish zones on the Nifty and the Bank Nifty on short term as well as medium term, that is daily and the weekly. Both the trend has changed. So trend change has happened. Momentum has picked up, but Bank Nifty on the medium terms is lacking a little more to pick up. Now look at the volatility. It shot up 7% nearly to that last week. Right, from the lower level it has shot up and then last day it retraced a little bit. Now volatility is actually 7% shoot up, and right now it is at 17.6, and there's a chance that it can shoot up further to the 20 or 19 or 18 kind of levels and then mean revert, or there is a chance that it will end up the thing and then fall back to the 15 kind of levels. All of this can happen. Yeah, but right now it is somewhere in the mid of the range of 15 and 20, you can say. Right now, implied volatility is 16.2, while the India VIX is 17.6, implied volatility 16.2, and then HIV is less than that, 17.5, and IVP is short up a little bit, 48.4 levels. Right. The next thing is look at the open interest analysis data. From Nifty 17,500 seems to be where the highest put rating is seen for the January 13th expiry, and after that 16,800 is also seeing a lot of put rating. The resistance upside maximum call rating is seen as 18,000. 18,500 also has got good number of resistance, good number of call rating basically put there. And Bank Nifty 36,000 is where the highest put rating is there, and 37,000 is where the next support zone that is seen here, this level and this level. Right? And 38,000 seems to be a major resistance, and 38,500 also has got good number of call rating that is there in the Bank Nifty. That's about the open interest and sectorial analysis. If you do IT sector went bearish last week, 1.5%. The US market also fall down, so that could be the reason. And IT sector closed red 1.5%. It's a bull trap that happened last week. Short term momentum also slipped to the sideways last week. So if you want, you can go cautiously bullish, but since the medium term is still bullish, but it's better to wait for the momentum to catch up into the bullish zones next week before you pick up the stocks in that. But otherwise, IT continues to be bullish on the medium term. FMCG 0.5% up, metal 3% up, auto is 3% up, pharma is 3%. Yeah, reality is for 0.5% up, but pharma went down 3% down, and momentum is also in the sideways. You just can't. Auto seems to be bullish on the short term, but weak momentum is sideways. So you can cautiously pick up longs, or you can wait for the short term also to catch up to move into the bullish zone. So auto and IT is kind of bullish zones. Again, the other sectors are all moved up except for the pharma, but it continues to be having less momentum in the short term, right? And although IT also, both short term and medium term bullishness not seen yet. So it has to be cautious pickup of the longs is what the sector analysis is saying, right? If you're going for a top down approach of picking up the stocks. Now, institutional participation data, if you see 1,100 crores of buying happened by the FII, which is a good thing in the new year, and there is also about 3,300 crores of them last week. That's the reason why the market shot up, right? Derivatives data showing a flat movement of the FIDA. Now, global markets, if you see, you can, this is a weekly chart for the dollar, and you can see that dollar the USD INR chart is what you see on the top, not the dollar index. Dollar index is consolidating last week also, but last week it seems to be a green candle, which is some kind of a rise in the good dollar has strengthened further, but that did not reflect in the USD INR currency we are trading in our market. Right? That seems to have gone red and taken the support at the very same support zone after a big fall from the attempted breakout from the previous resistance that failed. Right? So it's a third week of downward. It is taking a support. So it's less likely that the channel gets broken and goes down. It may be now attempting to either consolidate in the same zone or slightly moving up. I'm talking about the USD currency pair, but yeah, US dollar index seems to be consolidating, but some strength was seen last week. Now, global markets, if you see the US markets had a red week last week. Nasdaq fall 5%, S&P 500 fall 2%, and Dow Jones also closed red and see the low China. So the globally the mother market, US market was down last week, but our markets did not bother that and then shot up. Dollar index was indecisive dodgy with 95.73 slight up. USD INR fell 0.2% and then now it had dropped off from the earlier big move and then kind of settled 74.2 levels. Now the next thing is that the crude oil has shot up last week. That is very bad for us. It has shot up to 78.53 kind of levels on the weekly basis, right? So that's around 4% of up move, which is worrisome. Now, if you look at the gold, you can see that it has fallen down after an attempt to break out of this red line, this black line, which is a resistance zone, which was tested multiple times, at least 3, 4, 5, no, at least 10 times it is finding resistance. It's famous 1797 kind of levels, right? So it's well within the channel on the weekly basis. If you see the couple handle pattern is intact, but very flat momentum, and then every attempt to move down just gets negated and then falls back. That's what is happening in the last 1 year in gold. Two picks for the next week, mostly swing trades. Belasoft is seems to have broken out of some kind of triangular wedge kind of pattern, and then the breakout is solid and it's having very huge volumes on a weekly candle. Very good momentum and very good trend, and the IT sector also is kind of bullish. Second one is the auto sector, which is also the next sector that is bullish after the IT. Escort is one. The weekly candle shows that there is kind of a big breakout from the rounding pattern has happened, and then huge volume buying is happening in a triangular retracement pullback happened, and then now it is broken out of that also, and then The swing and a position trade, both of these things should work. Although there could be retracements because in the case of IT, because it does run a lot, that can be expected. So you'll have to play it in a positional more. Right? So the soft and escorts. And this is one play that you can do for the next week on a weekly expiry basis on the indices, and this time it is Bank Nifty. So it's selling off a 39,100 put for the 13th January and 39,500 put by. It's kind of a spread, right? So bear spread. So if the market is pulling back, then you don't lose anything. So this is in anticipation that the market could give some pullback. Although there is a bullish view, is what we get. Now there's a lot of Fed news and COVID news and all that floating around. So reversals and retracements, pullbacks are all possible anytime. So assumption is that it will not break from 37 to it won't move more than 500 points next week is what the assumption is. But in case that happens, you'll have to push this roll up to the gaining side. So that can be the adjustment, or else you have to take the max locks if in case a big breakout again continues, right? But in case of any pullback that happens, we gain next week. It's a good probability trade, but yeah, adjustments, if you try to do, you may not have time because banking moves may be so swift, but yeah, you have to take it with a pinch of salt in case your view breaks, right? Yes, just to wrap up, market has reconfirmed the bounce back last week. Second week, third week of confirmation of the pullback retrieval. Right? That's what happened last week, and it is supported by Bank Nifty. That is the main thing. It was not happening earlier, and a positive price action and the momentum resulted because of that. Right? So minor pullback happened last Thursday, and then a small bounce with a small body closing happened after that. That seems to be a change in polarity, which is again bullish, and that is seen on both indices more or less. There is a range shift momentum that is seen, and trend has crossed over in the short term on both weekly and daily. But still, it is better to take cautious view. Cautious bullishness is what you have to see, right? Because FIs have sold last week also. Some 2,000 crores selling happened in one day, one of those days. But overall, if you see, selling is reduced, but still you have to be cautious because FIs don't hesitate to sell. Even there's no continuous buying that has come back yet, right? And no big buying also has not happened yet. So the main thing is the lower low, lower high pattern seems to have broken, and then that gives us a bit, gives us a confidence that probably it may be consolidating and not going to crash back. Even if it is, not moving up. That's the cautious bullishness reason. The VIX again shot up from the 16 kind of levels now to 17.5 above level, so it can go further up, right? Or it can fall down back to the 15 level. So it's somewhere in the mid. So it can be introvert to any way within that range. But its main thing is it's keeping that range. And use of vertical spreads in the option strategies I stress on every time, because why we have to use options vertical spreads is because if you are trading Nifty or Bank Nifty based on just stop losses intraday or positional, whatever, no stop losses, if you try to do, there is a chance that depending on your position size, you may ruin yourself in case of any exchange down or a big disaster or black swan events happens, right? So if you're carrying forward, always go for vertical spreads or fully hedged spreads like current, like fully hedged strategies like double diagonal and counter and all of this. But otherwise, if you just have a directional strategy, go for the vertical spreads if you're carrying forward overnight that thing, right? Intraday also, if the position size is big, you have to better buy some hedge positions rather than putting a stop loss, because stop loss gets cancelled in case of a black swan. So keep that in mind. That's the reason why I put this not in every slide at the end. When it comes to playing the options game, with respect to the volatility, right? So anything above India VIX rising above 20, you have to be cautious. Let's see. Beyond the options playing the volatility. So wrap up, it's a cautious bullish view. It's more a bullish view because the change in polarity, change in trend crossover, momentum pickup, price action, all of this combined, it's more or less bullish, but still being cautious because of the bad news floating around, right? So I hope this helps you to frame your own market view for the next week and frame your trade plan. If it helps you in some way, consider the like button and then share it to your friends and colleagues so that benefits all of us. Thanks for watching. Happy trading and happy learning. Bye.